Hello and welcome to this week's Australian Share Market Report. I'm Dale Gillham, Chief Analyst at Wealth Within. This week I'll be discussing the power of compounding, the All Ordinaries Index and this week's stocks of interest. Now before we jump into the report, I'd just like to mention that if you have any thoughts on investing or trading, please comment below and be sure to subscribe to our channel to keep up to date. So let's get into this week's report. Albert Einstein once said, "Compound interest is the eighth wonder of the world. He who understands it, earns it. He who doesn't, pays it." Compound interest is the most powerful force in the universe. Now it's hard to argue with Einstein, as the power of compounding really is one of the most useful tools investors have. Warren Buffett famously stated that someone is sitting in the shade today because someone else planted a tree a very long time ago. The true meaning behind this statement is what is referred to as the law of delayed gratification. In other words, by taking action today, you can enjoy prosperity in the future. A great mantra that resonated with me in my very young days was, "I will do today what others won't, so I can play tomorrow where others can't." Unfortunately, too many people don't do, as they make the choice to sit on the sidelines waiting for something to happen, rather than taking action to make it happen. The earlier you start taking action, the more you are able to take advantage of compounding. Compounding can be explained in understanding the rule of 72. If you understand the rule of 72, you can use this to compound your investment successfully. Quite simply, if you divide 72 by a particular annual return, you'll be able to determine how long it will take to double your money. Or in other words, compound your money in that you're getting your money to make you more money. For example, a 7% per annum investment will double in value in a little over 10 years. A 14% per annum investment will double in a little over 5 years. Now let's say you want to double your money every 8 years. Here you would simply divide 72 by 8 to arrive at an annual growth rate of 9%. Therefore, any investment you investigate must generate that return so that you can compound your return to get you where you desire. The rule of 72 can also be used to calculate the effect of inflation on any money you choose not to invest. For example, if the annual inflation rate is 4%, it will take 18 years before your money will be worth half of what it is today. While the rule of 72 is a simplistic methodology for calculating the time it takes for your initial investment to double or for your money to devalue, it is also important to understand the impact that inflation will have on your growth of your portfolio over time. All too often, people do not consider these factors and as a result struggle in retirement as they have not generated enough retirement savings through compounding. This compounding strategy is one of many that I teach in my new book, Accelerate Your Wealth. If you would like to learn more about the power of compounding and how to accelerate your wealth, then buy my book at all good bookstores and online. So let's get into this week's stocks.
Alrighty, on your screen at the moment is a monthly bar chart of the All Ordinaries Index. Again, I'm in my recording booth and looking at some of the charts that I do with our students of our diploma of share trading investment and our advanced students, and obviously our students in other courses such as trading for cash flows. So these are the sorts of charts that I look at with them. For those of you who haven't sort of seen them, I'll just sort of click back a bit on my workbook and you can see some of the sort of the work that I do on some of these sorts of charts. So where's the All Ordinaries Index going? Well, it's finally having those couple of weeks down that I've been thinking of for a while. It's just been a little bit out on the timing side of things. And looking at the current monthly bar, remember we are on a monthly chart, and you can see here the current monthly bar. Yes, we're only a few days in to that, so that would have data to the 5th of October. You see it's closed at 6301. Now it opened at 6325. It's traded down, and you can see there if I bring it up a little bit, you see it's traded right down and then come back and closed up here. So depending on what's going to happen this month, over the next couple of weeks, we may see it drop below this low here at 6211. But if it does, it won't be by very, very much. You can see my uptrend line there. I think it would just touch the trend line, or maybe not even get to that before it starts to move back up again. But we were expecting some time down, but you never know, it may start to move back up again and close higher for the month. But let's just take it down onto the weekly chart. I'll just change my time frame, and you can see here how we've made a little bit of a lower high, and then this was last week, so that's in week ending Friday the 5th of October. So it's possible that we could see a little bit more of a move down, and if I put, just put like a price retracement on here, you'll see what I mean. Here I'm looking at, if it does keep falling, it'll probably find down to that 6157 level, so it might come down to that and then start to move up again. But that's it, it may not even do that. It may just find some support above this level here at 6211 and then start to rise up, and it's quite conceivable that it would actually do that. But looking at the daily chart, and we're just going quickly down to the daily chart, and you can see here the last 2-3 days is up, and this is why I'm thinking it's, we had a big day down on the Tuesday, there's your Monday, and then we spent a few days going back up again. So it'll be interesting to see what happens today and see whether it goes up. And the other interesting thing is the Dow's had two heavy days going down last Thursday and Friday after making a new all-time high, and people in the US are going, the Dow's down. The journalists get out all the time and, hey, the Dow's down, hey, the market's going to crash, the sky's falling, all that sort of rubbish. And it is interesting, but our market went up while the Dow went down, and it's to me, it's not unusual for that sort of stuff to happen, but I know a lot of people watch the Dow and then try and trade on that. Now, it's a bit hit and miss, that sort of thing, because the big industry knows this sort of stuff, and that people try and say, watch the Dow and then, do what, if the Dow's bearish, get in and try and trade some stocks down. And the industry know that, and they play on people all of the time. Same with support and resistance levels. I had a question on the forum, on one of the YouTube videos that I've done, and somebody was talking about support and resistance, and I said, don't think you're the only one to know about support and resistance. Pretty much everybody knows about support and resistance because it's so easy to teach, and so many people think they know what it is, but the big end of town know it, and big end of town use people's ignorance and around that support and resistance, and use their ignorance around them not having a lot of tools and solid strategies to push price through support and resistance levels to trigger trades, whether they're trading short or whether they're trading long. It's irrelevant to the industry because they're making a few percent out of people who don't really know what they're doing. And people get caught all the time. They buy on a support resistance level and all of a sudden they go, oh, geez, it's reversed on me, or hey, I got triggered into the marketplace because they put their trade into a broker, and only to see it reverse and take them out again. And they have these little losses all over the place. And the brokers are having fun doing that because it's perfectly legal to buy and sell. That's what they're doing, and they're pushing the price around. So to get more trading actually happening. So what's happening with the All Ords? As I said, I don't think any move down at the moment, might only be short-lived. We've had 2-3 up there. If it does go down for more than 2 or 3 weeks and starts breaking this line, then I'll start to get a bit not nervous, but I think I'll change my mind, and it might mean we're moving into a longer term low a little bit earlier than what I expected. I'm expecting us to go up right through to probably around about March or April, in that sort of bracket. So that's what I'm looking at. So let's go on. This week I want to go and have a look at some stocks in the financial sector, so I'm going to go and do that now. This week I wanted to talk about the financial stocks in the Australian market. So if for those of you who haven't really sort of looked, if you look at the top 20 stocks on the Australian market, overwhelmingly Australia is very much heavy on financial stocks. And I think, from memory, out of the top 20 stocks, 11 of them are in the financial services sector. When you look at banks and insurance companies, like QBEs, those sorts of stuff are in there, the AMPs in that top 20. Now, that to me is a pretty overweighted on financials, where if you look at the S&P 500 or even the Dow, they're not as heavily weighted in the financial stocks. I think for the S&P 500, from memory, in the top 10, only JP Morgan is in the top 10. And I'm trying to remember how many others are in the top 20. I'd have to check on that one, but I don't think it's nowhere near 10 like we've got, or 10 or 11 like we've got. So it's a little bit more diversified. I mean, obviously on the S&P 500, Apple is number one, and Microsoft, I believe, is number two. And I'm trying to remember number three on that. I don't necessarily look at that's all by market capitalization. But the Dow is a little bit different than what the S&P 500. If you look at, there's about 18 out of the top 30 stocks in the S&P. Only 18 of them are in the Dow as well, and the Dow has 30 stocks in it. So if you had a look at that sort of stuff, anyway. But let's have a look at some of the big banks here in Australia. And the one on your screen right now is National Bank, and I am going to cover a stock that somebody's asked me to cover as well. So looking at National Bank, and this is with all of the banks. If you look at all of the banks, their high was March, April 2015. That's what their last high was. So all the big four banks are like that. You can see NAB was high at 37.78. It had a low in, what's that date, February 2016 of 23.82. Interestingly, I mean, this was a nice little rundown, as you saw. As you can see there, 36.87%. It's had a nice little run up and another little run down, and this low hasn't been broken. So it's pretty, anybody who's been a buy and hold person on NAB, if you bought it back here in February 2013, here we are over 5 years later, and you haven't made a cracker on it other than some dividends. And this is again why I talk about buy and hold is not necessarily a great strategy. Yeah, you can collect dividends, but dividends don't make you rich. They don't make you a lot of money. Dividends, you can use them for funding loans, that sort of stuff, but always go for growth. Always go for growth rather than for dividends. But people continue to hold banks for dividends, and also Telstra. They hold Telstra for dividends. But if you're looking at this, it is bearish at this point in time. We do have a downward trend through here. This bar currently, we're only 1 week into October, but it is bearish at this point in time. If it broke through that level of 25.90, then I'd suggest it's going to give this a serious challenge, or this low here at 23.82 a serious challenge at this point in time. But you never know, it might find some support here, because now the Royal Commission's over. Now, the thing is, people are thinking the Royal Commission and the report's coming out now, so they should be bearish now. Let's short the banks now. The opposite's going to happen to me, and this is why my contrarian view and everything. The banks had known about the Royal Commission even before they announced it. They knew they were eventually going to get one, and they were making all their plans. The institutional funds who were holding banks, they've all pulled out and reweighted their portfolios ready. Now they'd be looking to then now move forward. And as Buffett always says, buying doom, selling boom. It doesn't get more doomier for banks and insurance companies right now. So what would happen, or what I would expect would happen, that they're going to start to find some support and start to move back up again. So these would be on my watch list from that point of view. But looking at this at the moment, it is more bearish. But again, if this thing holds up, then it'll be a really, really nice run. So in terms of NAB, if we see this fall, if it doesn't fall through this sort of levels here, if it falls through this 26.65, then it's going to go through to that 25.90 and probably below that, and then it's going to challenge that $23 mark. So right now it's not looking super strong, but that's okay. Here's Westpac, again another one not looking super strong, and actually it looks a little bit worse than NAB. Out of all the big four banks, NAB consistently over 20-30 years is the worst performer, by the way. If you look at all the big four banks, NAB really doesn't make a lot of money for investors. If you buy and hold, you're better off holding Combank and Westpac. They're the two better performers, with ANZ coming in third and NAB fourth when you look at the statistics. As you can see here, Westpac's actually now fallen right through that level here. If I draw that right across, you can see now it's now made its lowest low since that period there back in April 2015. And still looking bearish, even though this is only 1 week and it opened here and it's closed up near its high after pushing through. Again, you may be looking at this thing going, okay, well maybe it's about to find some support, and that's the real thing with this stock. It is a good stock, Westpac, and this is holding up at a really strong support level of that 27. If it breaks that 27, it's going to hit 24. So just at this point in time, would I be buying the banks? No. Would I be having them on my careful watch list? I'd say absolutely yes. I am watching these quite carefully for a good opportunity to get in, because essentially around these sorts of levels where it is, if I put on my nice little tool, from where it's closed on Friday, just to get back up to its all-time high, there's 45% profit if you can get into it. Now, again, too early, way too early. One of the things I teach my traders is trade on confirmation, not speculation. And I find most people who trade on speculation, not confirmation. Here's CommBank, and obviously this is one I've already worked on before, but again, it's another bearish looking stock. And if I look at that, and you can see here, it broke through that low back through that early low, and as you can see again, March 2015, it is bearish, it is going down. I'm expecting it to have a low in this sort of shaded area, and it's right on time. It is right on time, so I would expect it to fall below that low of 67.22 in the not too distant future, and then start to move up. So banks are bearish at the moment, but not too bearish, and that's what I mean, not too bearish, meaning would I be shorting the banks now? Unless I've got a lot of knowledge, I wouldn't be shorting the banks. That's if I'm talking to people, the uneducated people, going, let's short the banks. The banks are not heavily shorted at any stage. They're not that sort of stuff, because they're all very big staple stocks within superannuation funds and a lot of big managed funds, so they're not looking for it to fall too much. And as you can see by the amount of times that they're falling away. ANZ, another one here. Again, another big fall. It was the biggest fall, 41% in that first sort of 12 months past that March, April 2015. But it's been stronger. Look at this. It's looking a lot more stronger than the other stocks. If I put my little tool on here, you can see here that it's found some support around that 2609, and currently this sort of indecisive bar from last week. If it holds above here and starts to move back up again, and it would tell me it's more bullish if it breaks through that 13.9. If it breaks through that, then that could be a nice little trade. If we get a down bar this week and then this is in trouble, it will break below that, or I'd be suggesting it probably will break below that at 26.08. So be very, very careful with the banks at the moment. Would I be entering them? No. Would I be watching them? Yes. And that's really what I'm suggesting people to do. And again, why buy and hold doesn't work. Have a look at this. If you'd bought way back here in March 2006, you could have bought in at $25 to $26, and guess where it is now? It's only $27. So we're talking about 2006. So we're talking about 12 years. All you've picked up is dividends if you've bought and hold. But in that time, you could have traded this stock and made a mozza several times if you really did understand what you were doing, and most people don't, but that's another question. But really, buy and hold is not a strategy that I promote. It works in a fashion. If you just want to collect dividends because you're retired, then that's okay, holding the banks. But again, you make more money by buying and selling them and paying some tax. You'll actually make far more money than you will out of dividends, just with a little bit of knowledge. Don't be worried about the US market is probably the easiest thing for me to say, and too much noise on the media. When you get a lot of noise in the media about something, generally take the opposite view. I do get a lot of people suggesting, the US market's going to crash, blah, blah, blah. Yeah, so don't get too stressed about what's going on in the marketplace in terms of the US and everything else, because simply they are trying to sell newspapers and get people to watch their TV. Not necessarily give you good advice. So right now I don't think the US market is going to crash heavily at all. So the stock I got was from a Jake Perkins. He picked up he was watching one of the videos on our YouTube channel. He said, "Hi, can you please review CLV? Clover Corp. Cheers, great channel." Thanks for that, Jake, and thanks for the nice comments on the channel. This is a speculative stock, and it really is a speculative stock. And before I talk too much about it, I would say, if people said to me, would I trade this stock? The answer is no. Would I? And the reason why is it's so speculative. Looking at this, it's quite a speculative stock, and it runs. And most people, when they look at stocks like this, they've already seen this big run. Because if you look at this big, that's not what I want. If you look at the big run from down here in September through to there, it's 402%. So once it's gathering momentum, and this is like a train, one more it gathers momentum, the more people jump in, and the amateurs always jump in at the tops. They're jumping in up around this sort of levels thinking they're going to make a mozza. And that's what I was talking about, is the tortoise and the hare earlier. And all the amateurs are buying in, where the guys that are already in the know, they've already got out and they're getting out, and this is what's happening through here. People have been taking profits, while all these others thinking 400%, wow, geez, I could make a hell of a lot of money, because in 400% in 12 months, that's pretty huge. What it's doing now is pretty much it's consolidating here. Do I think it's going to go up again at the moment? Yes. Do I think it's going to do 400% again? No, absolutely not a hope in hell it's going to do that kind of levels again. And I'm not having a go at Jake or anybody else if you've actually owned this stock, but I find a lot of people speculate, and if you make money on this stock, and not meaning I'm saying 99% of people who do make money on this stock are doing it in that luck. It really is luck, because if you look here, look at all these bars. They're very short in nature, and this is the stuff you need to understand in the marketplace. All they're very short. All their opens and closes are very close. And if I go down onto the daily chart, you'll see that even more. This is quite, look at this. This is really, really speculative. Any one of these days, here we go, 146,000 shares. 172,000 shares of $1.50. So $1.50. So even though it was like, that's less than 140. What's that? Left that, even if it was $2, it's still only $140,000. So bringing it back into dollar terms, this is highly illiquid. And my money wouldn't be anywhere near this, because it's much more easily manipulated. And the interesting thing here, and what a lot of people don't understand, is you can see moves down 30%. In days. We're talking about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Up 34% in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. This is why people are trying to see it. They're seeing this. And a lot of people will get on a chat forum and see people talk about this and go, get into this, get into this, get into this. Trying to trade this is just, it's really, really, really hard, unless you've got a lot of knowledge or you're just really, really lucky. Again, look at that 30% in 1, 2, 3, 4, 5, 6 days. So this is a roller coaster of emotions for anybody that tries to buy in. And your entries and exits would just be purely based on speculation of what you think might be happening. So right now, where's it going to go? I actually think it could actually head up a little bit. Let me just get rid of all of that. I'll hide all those. I actually think it could probably go up a little bit. I'm definitely not saying it's going to go up here. How far could it go? It's one of those things. It's pure speculation of how far it could actually go from where it is right now. But it's in that consolidation sort of pattern. I think you might get up to $1.86 if you're lucky. It may go up to $2.16 if you're lucky from there. But if looking at this, you're talking about 19 to 40%. So if you're really lucky, you might pick up some of that. But I don't think it's going to go much more than that, because see how vertical it is? Stocks will have a look at this. If I go back to the monthly, you'll see this very cyclical stock. See, if you look at this, it struggles to break through those sorts of levels. So it's when they go up really fast like this, they'll come down really fast. So people that have bought it up around here, if it starts to fall away anytime soon, then they'll start panicking, and it'll just push right back down into these sorts of areas, and people will lose money. But good question. But as I said, it's not the sort of stock that I will trade, because again, they don't tend to run on a lot of rules. They tend to run on a lot of speculation, and I don't ever trade on speculation. I always trade on confirmation and looking at what good solid moves that I can actually trade consistently all the time. Stocks like this you'll get right maybe a couple of times out of 100 and get in and get out and make some good money for yourself. But anyway, good on you, Jake. If you want me to look at some stocks for you, just put some things down the bottom. Always, again, click like. Put the like right now before you turn off this video. Hit like. Also hit subscribe to our channel, and please share this channel with your friends, forward it into your Facebook page and help us out to get a lot more information out to people. So good luck, good trading. I'll talk to you next time. Bye-bye.
What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading.
Now, if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.